This is Sepide, with 8 years of experience in financial markets. The purpose of this channel is to provide analyses that are different compared to the other current financial market channels. We like to examine the markets from perspectives that perhaps fewer people pay attention to or even notice. The goal of this channel is to provide analysis, not trading signals. We'd like to analyze together and let our analysis grow and become stronger together. Today we are here with the global gold ounce symbol, and we're looking at its chart. Today is September 24th in the year 2025, and the price of gold is $3,745. We are seeing growth in the global gold price, which has many reasons, including the beginning of interest rate cuts in the US, or the US lining up against Venezuela, or conflicts in the Middle East, or China's excessive accumulation. And we can see that this is causing a large number of buyers to appear in the market. On the daily time frame, there is really nothing visible in the market to design a point from, but on the 4-hour time frame, the first thing that comes to mind is an ascending channel where the market has reacted to its highs and lows so far. We can see that it touched the top, and then after the touch, it caused the market to reject downward. If I want to explain without Ichimoku tools, the first step is this channel line. If it breaks, we come down to the bottom of the channel, or we may come around 3,696, the last 4-hour high that hasn't had a pullback yet and is considered missed. So now we have data suggesting the market may continue dropping, classically toward the channel bottom or the last broken high. Which is 3,697. But now let's turn on Ichimoku and see what it says. When we turn on Ichimoku, we see a flat Kijun at 3,709. So now we have two elements to pay closer attention to in the chart. So we say a market drop toward the channel bottom is not out of reach. The buying zone, if our basis is buying global gold, should be sought between these two levels for higher targets. Meaning, if we want to consider targets, we have room in gold up to 4,100. So we can't say the downtrend is starting. No, any drop is based on the current data, based on the models we are seeing in the markets, from the buying flows, from the war-like alignments, from the beginning of interest rate cuts, which shows us that risky markets are experiencing strong growth, especially global gold. So now on the 4-hour time frame, we have found our buy zone. We say if the price reaches this zone and gives a candlestick reaction, we will buy for higher numbers. For the levels 3,820 to 3,830, we cannot consider the market's drop meaningless. The market, to reach higher highs, needs corrections. Corrections in an uptrend are a priority. So now, on the 4-hour time frame, we wait for the market to reach these two bases, show a reaction, give confirmation, and then we buy. Note that this is the 4-hour time frame. Now let's move into the 1-hour time frame to see the situation in the 1-hour chart. When we look at the situation, we see how valid those zones we drew on the 4-hour time frame are in the 1-hour too. From this shadow to the small reactions we had here, we turn on Ichimoku to see what it shows us. We can see a bearish guard in Ichimoku, and we see that the Kijun and Tenkan together are both falling downward. So our safe buying zones in global gold are still those two areas. If we want to say what happens to reach 45, in the 1-hour time frame, The last market low is 40. Pay attention, the last market low in the current 1-hour chart is 3,749. If this breaks, we will probably see the market fall to these levels. And once again, we have another entry as traders, following the same 4-hour plan, moving upward. For now, we are waiting for this zone to break, and after the break, we may not get a pullback, because a pullback is the market's kindness to us. It might not give any pullback at all, but we wait to find optimal buying points. Yes, we all know the gold trend is bullish. We know the trend has very high targets. But we cannot buy at the top just expecting it to go much higher. No, we must wait for the market to reach the safe zone, the place where it has absorbed energy and liquidity and is ready for another rally. So now, in the 1-hour time frame, we are waiting for the market to break this pattern. After the break, we go to the 4-hour zone we identified. There, we look for an entry trigger. If the market gives us an entry trigger, we enter a buy position and aim for 3,400. There is plenty of room for the market to be bought. So in the coming days or even hours, we are waiting for this level and this zone to break, to reach lower numbers. Thank you very much for watching the video. I hope this analysis helps improve your perspective on the market. And I hope we'll have good days trading together, and I wish you profit.